Hi, and welcome to this episode of Brute for Change. This is a very interesting one we have today. We have one of the co-founders and partners of Companion Capital, a growth stage private equity fund based out of London, looking at largely the European and North American markets. Today we have with us Mr. Riaz with us, like Mr. Riaz Currimjee. Riaz, thank you for being here. Really happy to have you. And let me hand it off to you. I would love to know about your background. What made you get into growth PE investing? What were your motivations? And then we can probably get into what Companion does.
Perfect, Karen. Pleasure to meet you, and thank you for giving me this opportunity. So, Companion Capital, firstly, is an initiative that was founded by three people whose background I will provide in a minute. Ashwin, Roy, Sunil, Nair, and myself, about a year and a half ago, to build a climate-focused growth equity firm targeting two very large and, in our opinion, quite similar geographies, India and Africa. We are based in London, as you correctly pointed out. So let me just start with some personal background on all three of us to set the scene. I was born and raised in Mauritius. My family originally comes from India. My great-grandfather left small port city in Gujarat in the late 1800s, penniless, to go make his fortune in this little island called Mauritius. He was very, very successful, quite early on, and built the foundations of what is now one of the largest diversified conglomerates in Mauritius. The family has retained very, very strong links with India. My father's generation, my father and his brothers and cousins were educated in Mumbai in the 30s and 40s. As importantly, my family were the founding shareholders of Bharti Cellular. So I guess I come from a family business which has always been entrepreneurial, has been risk-taking. We set up the first mobile operator in the Southern Hemisphere in the mid-80s. So we had mobile operator in Mauritius most probably 7, 8 years before India. And I really had no clue about the sector, let's be honest. No one did really at that point. But also other things that I learned, I guess, at home within the family is that we've also been very partnership oriented. For the past 40 years, all of our businesses are or JVs or joint ventures partnerships with multinationals or with much bigger companies than ourselves. And from the days of my great-grandfather being very philanthropic and being very focused on giving back. And the family took decisions over our history of really playing a critical role in helping our little country, Mauritius, grow in many ways. So I decided not to join the family, but I'm an active non-executive director and shareholder. I went to Boston College after being educated in Mauritius, and it is actually at BC that I met Sandeep Barma, the co-founder of Green Frontier Capital. So Sandeep and I have known each other for 32 years, or soon to be 32 years. And that's the genesis of the relationship. After BC, I qualified as a chartered accountant with a firm called Arthur Andersen that doesn't exist anymore. Then moved into M&A. I worked with Lazard. I did about 4.5 years with M&A, little stint at hedge funds, and for the past 15 odd years worked for myself. First few years, I partnered with a gentleman called Gopal Jain to help him set up and develop a private equity firm in India called Gaja Capital. I remain extremely close to Gaja. I'm a non-executive director of a number of its offshore entities. And, really on a professional basis, that really was my first introduction to India. When I guess the first wave of India being on the global investment landscape just a few years before the BRIC report was published and thereafter. After that, spent a few years doing a variety of entrepreneurial things in Mauritius, in the UK, and India. And about 4 or 5 years ago, or 5, 6 years ago to be precise, met in London Ashwin, who's the second partner of Companion Capital. Ashwin, like me, is from Mauritius, although we met in London. We didn't know each other back home. And we bonded or connected really on the massive opportunities that exist at the intersection of impact and financial returns. And where we believe that either investing in continents like India or Africa or other emerging markets, you have the potential of really changing the lives of people and leaving lasting impact, while also making huge financial returns. So Ashwin and I, on that basis, then set up what was known as Surya Capital, or we developed Surya Capital into an African private equity firm operating on a deal-by-deal basis. Ashwin introduced me to Sunil, and Sunil, over the sort of Surya Capital part of our partnership, was a non-executive partner and advisor to us at Surya Capital. Ashwin and Sunil have known each other for 23 years. But Sunil is born in India. First job was with McKinsey, then moved to Salomon Brothers, then Citibank, and was part of the founding team of CVCI. CVCI was founded in 2000 by Citigroup, and grew to become the largest global emerging market private equity group. I will use emerging market and growth market interchangeably here, because really emerging market was the term that was used to describe the countries we're talking about, but we tend to prefer growth market today, as really for us, the attractiveness of these markets is not that they're emerging, but that compared to other parts of the world, that they grow much faster and offer much more growth potential. So CVCI was set up, as I said, by Citi. Sunil was a co-founder, headed India, Central Eastern Europe, Africa, and the Middle East, which effectively made up about half of CVCI's AUM. CVCI was sold in 2013, at which point it had $8 billion under management. Sunil hired Ashwin into CVCI. Ashwin was one of the first junior associates hired into CVCI. Ashwin, after being also educated in Mauritius, did his studies in the UK at Cambridge, qualified as a chartered accountant as well with Pricewaterhouse, and then effectively, since then, has worked in emerging market private equity. Spent 13 years with CVCI, so hired as a first-year associate, grew or stayed there literally till the end, and was a partner of the firm, and co-headed Central Eastern Europe, reporting into Sunil. So Sunil and Ashwin have worked together for 23 years. So, I think in a sector where you're investing effectively for the long term, and the pools of capital that one manages is longer term in horizon. I think having either 2 of the 3 partners of Companion working together for 23 years, I think says something about ourselves, and also the fact that Ashwin and I have now worked together for 6 years. So really, CVCI is a core part of what we are building here at Companion, and leveraging the successes, the playbook that Ashwin and Sunil developed at CVCI. So really, that's the background on the 3 of us. Why did we start Companion? A couple of years ago, so firstly, I think, as I mentioned, Ashwin and I are both from Mauritius, a small island developing state, or SIDS as it's now known, that are amongst the most vulnerable to natural hazards caused by climate change. For us, this is really a personal matter. It touches us personally. We've seen the changes that climate change has is having on our own island, in terms of changing weather patterns, in terms of erosion, coastal erosion, and the like. So for us, this is first and foremost a personnel matter. But over the past 2 years, while we were, or 2 years, up until 2 years ago, when we were really focused exclusively on Africa on a full-time basis, we saw two trends. Two trends were becoming clearer to us. Number one, a negative trend. Climate change, as you know, Karen, impacts disproportionately populations in growth markets,
Exactly.
where about 84% of the world's population lives.
Exactly.
And while the capital that they receive is less than 20% of global capital. And some people argue it's less than that, more than that, but basically and simply, most of the world's population lives in growth markets. These growth markets will be disproportionately impacted by climate change, while they receive a very small percentage of the global capital, which in itself, in a totality, is too small, but a small percentage of that. On the other hand, growth markets have also leapfrogged industrial economies in certain aspects. If you look at certain sectors like communications, mobile phones, which is something I mentioned earlier, most Africans or most Indians never had and never will have fixed line phones. They went directly to mobile phones.
Yep.
Most Africans or Indians, and I'm just using those two because those are the two geographies that we focus on, will never have traditional bank accounts like I have in London, where you have a branch in a corner of a street. They will have digital bank accounts or mobile wallets. And these are two good examples. And in many ways, these are things that defined Africa as well. Yeah, the mobile phones is the single biggest or the single most impactful sector in Africa. Yeah? It's changed the lives of Africans as we know it. Secondly, we talked about fintech and financial services. The first fintech company in the world of scale comes from Kenya, a company called M-Pesa that was set up by a Vodafone subsidiary called Safaricom. So you've seen how in emerging markets, on growth markets, you are able to leapfrog what the sort of development paths that industrialized nations have taken. And we believe that this leapfrogging can and must be repeated across all sectors in a decarbonized or in a lower carbon way. And we're starting to see this. Renewable energy projects are being developed all across Africa and in India as well. And the same has started to happen, and we believe will happen in a major scale in mobility, in the built environment, in food and ag. And hopefully, and as I'm an optimist by nature, hopefully these growth markets will have a low carbon growth pathway, as opposed to the industrialized nations, where their growth and their development was fundamentally fueled by fossil fuels. So this presents a huge opportunity, as all of these subsectors are effectively being built and in a low carbon way, and we're fundamentally going through a second industrialization age, as we believe it.
Yeah.
So this challenge, or this disaster of massive scale that is climate change, offers entrepreneurs in these markets a huge opportunity. And that is the opportunity to develop products and services that meet the aspirations of Africans and Indians, while avoiding the high carbon mistake that underpinned the growth of industrialized nations. So this is what kind of got us initially focused on studying the sector in more detail. As you guys will know, at Green Frontier Capital, there has been an increase, even though it's small, over the past few decades in investments initially in renewable energy all across the world, and increasingly in early stage climate tech. Even though Green Frontier is one of the only investors in early stage climate in India, in the US, and in Europe, and in some other developed markets. Fortunately for us, there's been an increase in investments in early stage climate. But as these early stage, but the fact is that over the past 2 years, less than 6% of the capital that's been raised to invest in the climate sector is going to growth capital. And I'm not talking about just growth capital in emerging or growth markets. I'm talking about globally.
Yeah.
So there is therefore a critical gap in the global climate finance landscape that needs to be filled. And this is what attracted us to launch Companion Capital. And this is our objective, is to fill this gap for growth capital. So we see a massive white space here. And fundamentally, very simply, we're looking to replicate what Ashwin and Sunil developed at CVCI in the climate sector.
That's very interesting because you're absolutely right? Like, even if I go to look at the Indian ecosystem, a lot of money being raised essentially is early stage venture capital. And you're right? Because this industry is nascent, new, but it's been around for the last 3 years, and we've seen a flood of deals actually taking place. So
yeah,
the growth capital stage, even though we have stalwarts, India has typically had growth capital investors. We've had people like Gaja, for example, who you headed, who you were like a non-executive director, and then we've got the larger
absolutely many operators.
Exactly. But we've not really seen a very strong VC ecosystem, but I think now that's actually catching up, and now that ecosystem. So I'm actually jumping ship like a little bit
yeah, absolutely.
But the idea is that, we actually are seeing now the need of capital at slightly later stages, like a Series B, Series C, and onwards, to take these businesses up and scale them beyond like India. So really interesting position that you bring. I also like the anecdote that you brought about scaling technology. Within that itself, like, I want to probably go a little bit deeper over here. What are the sort of areas that you think, because India and Africa actually are they're almost like twins in terms of when it comes to technology and being able to where they are on the technology curve, right? So just that leapfrogging, the same anecdote that you said, we didn't do the landlines, jump straight to cell phones, and how that sort of enables so many other businesses to come out to play in the climate ecosystem. What is it that you are seeing in terms of opportunities where technology potentially could leapfrog what we're seeing in more mature markets in the West, for example?
Sure. I mean, it's technology or business model innovation. I think, some aspects don't have to be kind of the most latest technology. Okay. But let me give you some examples. Yes, you're right that, and we have to simplify for the purpose of this podcast, but there's a lot of similarities. First of all, India as a country, although a country of the size and scale of a continent, and Africa is 54 countries. Yeah. So for the sake of this interview,
but to be honest, with 27 or 28 states,
exactly 27 states
is pretty much like its own country,
exactly. Right? I mean, it is very much a continent, or it is a subcontinent for sure.
Yeah.
Africa's 54 independent countries. So, I will generalize, even though I don't like doing that for the purpose of this podcast. But you have similarities in many ways. You have two continents which have very similar demographics. Yeah, you have two continents where the next 30 or so years, 50% of the world's working population will either be Indian or African. You have two continents which have, as you said, and we'll come to that, but very large agriculture sectors. India is a leading producer, or is number one in so many crops in agriculture today. Obviously milk, in pulses, and in other. 85% of Indian farmers are smallholder farmers. 95% of African farmers are smallholder farmers. And from a report from a McKinsey study done a few years ago, 60% of the world's uncultivated land, arable uncultivated land, is in Africa. So India is sort of a breadbasket of the world today. Africa has a potential of being the breadbasket of the world today. So there's a lot of similarities between those continents. Technology, fintech, or financial services in general that are being deployed across mobile phones or technology. The advent of mobile phones and how mobile phones have changed these economies are two similarities. But and we can talk about these similarities in more detail. But let's get more specific here. As you know, at Green Frontier, climate is not a sector. Climate is a theme, because actually it cuts across every single sector.
Exactly.
Everything we do has a carbon footprint, and we need to reduce it, or the amount of carbon that is emitted. Renewable, so energy being one, and a lot of people associate climate investing with energy, but energy is only one subsector. Has fortunately, for the past few decades globally, with solar panels becoming more and more efficient and cheaper, and other sort of wind and so on, there's been a real expansion of renewable energy production globally. Europe, China leading the way, with other countries like India catching up, in the US, and so on and so forth. So in many ways, if you look at the climate sector, renewable energy is, in a way, the most mature subsector.
Yeah.
The next subsector we think, personally, that is going to really grow exponentially is mobility. And in this case, again, similarities, but also differences between India and Africa. Similarities is that both of these areas fundamentally are two-wheeler economies, or two or maybe three-wheeler economies, because they're generally still quite poor, and therefore penetration of cars is still less. In the case of India, we are absolutely focused. This is a sector we're very much focused on. The mobility opportunity is, in our opinion, underpinned by some basic economics. And at the end of the, number one, India still imports 87% of its fuel needs, and therefore any reduction in the amount of fuel or petrol that's consumed in India has a positive balance of payment impact. And number two, as we've seen, and as you know as well as we do, today it is economically or financially cheaper for a working class Indian to operate a electric two-wheeler or electric three-wheeler than the petrol equivalent. So it has a positive impact on their wallets, which is the only way fundamentally for a sector to scale exponentially. In the case of Africa, these two things apply, but you have an added element in certain countries in Africa. Kenya, for example, Rwanda, Zambia, and even some of the others, most of the electricity that they produce is renewable. In the case of Kenya, 77% of Kenya's electricity is renewable.
And when you say renewable, it's mostly hydro.
No, it's hydro and geothermal in Kenya, and also wind. One of the biggest wind farms actually in the world is in this place called Lake Turkana in Kenya. In some countries like Zambia or Rwanda, it's mostly hydro.
Mostly, yeah.
So again, different countries will have different realities. But those are historically Sura Capital focused on East Africa. and East Africa is the part of the continent that we know the best. These countries also don't produce any fuel. So the reality is that importing fuel using much needed foreign exchange when you're already producing renewable energy doesn't make sense. Yeah. So these are countries that have to have, should have, and it makes economical sense for them to have an electric mobility sector. And that will give rise to the same drivers that are now driving e-mobility in India. So as Bain Capital projects, and it's just a consultant, but the mobility sector in India should cross $100 billion by 2030. So we're looking at the whole ecosystem of mobility in India, and we can talk about that in more detail, but it would take a lot of time. But Green Frontier has invested in a number of absolutely phenomenal companies, some of which we are in discussions with right now, one of which I'm a personal investor in as well. So don't need to teach you guys about mobility. If anything, you are teaching us about mobility. You understand the drivers about mobility in India very well. So I won't go into that in a lot of detail. As we are currently, I should have mentioned up front, Companion currently is, like Green Frontier, actually operating on a deal-by-deal basis. We don't have a pool of capital. We raise capital for each deal that we do from a network of high net worth individuals, family offices, and institution investors, relationships we have built over our careers, predominantly based in Europe, in Africa, in the Middle East, and also in parts of the Americas. Mainly Central America. So these investors are coming on a deal-by-deal basis. Our goal is to raise a growth equity fund in the very near future. So our first focus, as I said, is mobility. A second area of focus for us, which is slightly earlier stage than our development or our focus on mobility is the food and ag space, which is also a sector clearly and this, as I mentioned earlier, is very similar drivers in both Africa and India. Very large agriculture economies dominated by smallholder farmers who historically and predominantly still produce food the traditional way. So there's significant opportunities here to transform these sectors with different business models, technology that will lead food production to have lower carbon emissions.
And
we can talk.
No, that's interesting. Just so that our audience knows, we've announced a partnership with Companion just a few weeks ago, where you all potentially are going to come in to work with us on Series Bs and onwards, the larger rounds, potentially, which is like, I think, one of a kind, like in India, because no one has been able to sort of secure some sort of a partnership like this, which enables startups to get capital literally from a seed stage right up to a Series C, Series D stage, right? And within that, we're already seeing the mobility ecosystem sort of mature now, right? It's been around for the last 5 years in India. We've seen a few companies already starting to now gain that critical mass and momentum to move forward. We spoke about the opportunities there, but just as a growth capital investor, how does deal sourcing and portfolio construction and the whole game for you all sort of differ from how it is typically for a VC?
Okay. The big difference, I would say, first of all, there's a big difference in growth equity in climate compared to growth equity, call it a decade or two ago. A decade or two ago, when Ashwin and Sunil, during their CVCI careers, made growth equity investments, these would be in established companies, often founded 10, 20, 30 years ago, either family businesses or entrepreneur-led, profitable, comfortable either on a net income level or at a sort of EBITDA level. Today, most climate companies, as you know, were founded within the past 5 years, maybe a few within the past 10 years, but not many. Most of them, if not all of them, founded by entrepreneurs. And in the case of India and Africa, one can generalize by saying majority of first-generation entrepreneurs. And most of them would have therefore had some sort of early stage VC funding. Whereas in the kind of previous period of growth equity investing, these companies would have bootstrapped, would have maybe had family backing, but where there wasn't a early stage venture capital ecosystem to fund them. So deal sourcing. So our deal sourcing in this bit to reflect this change is very different from the deal sourcing that was done a couple of decades ago, or even a decade ago. I.e., for us, the relationships that matter are with the early stage investors in climate companies. So either the climate focused VC funds, such as yourselves, and they are not many, or some of the other investors that might be more generalist early stage investors, whether venture capital funds or angel investors, but who have made investments in these companies. We are also starting to build relationships with some of these early stage climate companies or entrepreneurs, even though these are not potential investments for us yet. Some of them have been introduced by Green Frontier, some of the others via our own network, but it makes a lot of sense for us to build relationship with these companies years ahead, or a couple of years ahead at least, before they need our type of capital. Number one, so that's number one, deal sourcing method. Number two is, as we discussed just now, we are adopting or following really a thematic based approach as well. So while, as I said, climate is not a theme, is not a sector, but it's a theme that cuts across every sector, and there are a number of underlying subsectors. We are being kind of deliberate in developing investment theses, relationships with ecosystem partners, operating partners, thought leaders, entrepreneurs, investors in these different themes. And these relationships are not only limited to India or Africa, because the best practices, technology in mobility or in food and ag can come from anywhere in the world, and we can bring that to entrepreneurs that we partner with or invest in Africa and India.
Yeah.
So deal sourcing is multifaceted. To summarize, early stage investors in the climate sector, ecosystem developed around these underlying sub-themes, which is then supported by our advisory board that we're developing and our co-investors.
Great. So I just want to switch gears now, get a little bit deeper into the opportunity that you're seeing with India and the partnership that you also have with us for India. In general, the decarbonization and climate theme, we're seeing India sort of being touted as a powerhouse of the next wave of businesses that could potentially solve most of the world's problems when it comes to decarbonization and actually climate tech related issues. Are you sort of seeing something similar? And are there sort of examples where you think that India could be leaders and technologies could be adapted to other regions in the world, potentially even like Africa, for example, given though it's not the same, but there are some sort of overlap in problems.
Okay, let me start quickly by saying, listen, myself and my partners have been focused on growth markets for the past, in their case, for the past 23 years, in my case, for the past, 10, 12 years or even longer. So climate, unfortunately, greenhouse gases, as you know, Karan, is not, whether it's emitted in the UK, Sweden, or India, it doesn't matter. Yeah, it still goes up to the same place, and it still impacts climate in the same way. So, climate entrepreneurs and climate businesses around the world, from the smallest to the biggest economies in the world, have a role to play. Our interest, our track record, our experience, and our relationships are in growth markets. And as I said earlier, we believe that while, say, Africa today emits less than 10% of global greenhouse gas emissions, if Africa continues to grow as it's growing right now, and if African population continues to grow as it does right now, and if it doesn't do it in a lower carbon way, then we have a real problem. Yeah. So India is already, because of the size of its population, of its economy, the third largest emitter of greenhouse gas emissions, but it's still relatively small on a per capita basis. But what if India continues to grow its greenhouse gas emissions on a per capita basis as some of the more developed economies have done? We are in real trouble.
Yeah.
So in many ways, it's sort of the flip side. The developing economies that have caused this problem and are receiving most of the capital have, I wouldn't say a smaller role to play, but because these are economies that are already, if you want, at the peak of their greenhouse gas emissions, because they're already developed, they already have a big infrastructure, and these are not economies that are growing fast or populations that are growing fast. In a lot of cases, populations starting to shrink. It is really these growth economies that will cause the future increase in greenhouse gas emissions. So there needs to be a disproportionately even bigger focus on these economies. Yeah? So that's a combination of two things. This is what we know. This is what we've done. This is where we have a track record. And when you raise capital, you need to have a track record and know something about that's what we've done. But also, this is where we believe the focus needs to be. India is the fifth largest economy in the world. I'm not going to get into projections, but it won't be long before India is the third largest economy in the world. It's already the most populated country in the world, and it's the largest democracy in the world. As a Morgan Stanley report published, I believe, earlier this year or last year, entitled "This is India's Decade," we really think this is arguably one of the most, this is really, while the BRIC report published in 2005 heralded, if you want, the first phase of the world waking up to the potential of the Indian economy, we believe this is the time for India. The size and growth of the economy, I don't need to tell you, the depth of the pool of entrepreneurial talent, and the Indian government's commitment to net zero and its supported incentives towards decarbonizing the economy are the first reasons why we decided to focus on India. Increasingly, as you will be aware, the geopolitical headwinds faced by China are also offering a massive opportunity to India.
Exactly.
Okay, we'll all talk about, everyone talks about Apple, whatever the latest iPhone 15 or whatever is now being manufactured in India, but that's just the kind of the top of the iceberg. Across every sector today, you need to have a China plus one strategy, and that plus one is going to be, not in all cases, but in many cases, is going to be India. So I don't believe it's a good thing that China that China is facing these geopolitical issues, because global geopolitical issues with the world's second largest economy cannot be good for anyone. But if anyone benefiting from it, it is India. So I think the combination of China issues, the size of India's economy, the pool of entrepreneurial talent, especially in sort of subsectors like software and the like, really suggest that India will play an outsized role in the development of climate entrepreneurship. And
Yep.
there will be companies that will emanate from India. We believe in sectors like mobility, for example, likely to be in sort of two-wheel, I don't know, I don't have a crystal ball, but I wouldn't be that surprised that the Tesla of two-wheelers will be an Indian company, as India has more two-wheelers than any other country in the world. So, I think there are many subsectors where it is likely that global leaders in the climate sector will come from India. And because India is still on a GDP per capita, a relatively poor country, products and services developed for Indians have huge applicability in other parts of the world, whether it's Africa, Southeast Asia, Latin America. As we said earlier, 84% of the world lives in developing economies. And a lot of these developing economies share similar characteristics to India, but they don't have the same pool of entrepreneurial talent. They don't have the same size and growth, of their underlying economies. And finally, what we've seen with Indian entrepreneurs today compared to 10 years ago is 10 years ago, Indian entrepreneurs were focused predominantly, and maybe rightly, on the domestic economy.
Right.
It was really, we have a huge domestic economy, we're going to focus on the domestic economy. Today, a lot of the entrepreneurs we're talking to really are focused on the global economy, made in India, but for the world, not just focused on India. And that shows a lot about the ambition, the confidence of entrepreneurs today.
But a very quick, like, yes and no. Is that something that you're seeing in general when you're interacting with founders, when they're saying that, listen, this is a solution that I think is applicable to the world, and for most people that you interview or you talk to when you're getting pitched, is that the most common theme that you're seeing? Just quick yes or no?
It is an important theme. I wouldn't say it applies to everyone, and it's not a deal breaker for us if it's not, but it's something that we're noticing increasingly.
Yeah.
And the fact that we are able to provide them access to relationships in networks in some of these other large growth markets is definitely an advantage that we have.
That's amazing.
Versus other growth equity investors that are only focused on India.
Okay. Just on the mobility play, you made one very good comment. You said the next Tesla potentially of two-wheelers is going to be from India, right? And I truly believe in that story. We know that we're talking about a potential company that we're possibly going to back together. But my whole point is that where do the incumbents sort of fall in your view when it comes to this? Because there's always this eternal debate at an early stage, is that why aren't the incumbents doing this, right? And they have so much of capital. Why should we back a mobility play specifically, or like any play for that matter, which essentially is challenging the dynamics of an existing industry?
And it's a debate we had with a very significant investor a couple of weeks ago about mobility. And their view initially was that the electric two-wheeler market is going to be dominated by the big three incumbents in the sector. We don't have a crystal ball, but I think there are enough case studies that all of us can access on so many industries where new entrants with a disruptive mentality, displaced incumbents. The large mobile phone companies were not launched. Some of them were, but not all. Most of them were not launched by fixed line monopolies, even though these were monopolies. The most attractive fintechs in the world were not launched by the incumbent banks.
Got it.
Microsoft did not. They tried. Microsoft did not launch Google or create dominate the internet sector. And we can go on and on and on about other examples where, it's a question of culture. It's a question of legacy systems. It's a question of, like, you don't want to cannibalize your own business.
Absolutely. Absolutely.
So I think there's enough case studies out there of incumbents struggling when there is a massive disruption in their own sector. And we talk about mobility. Just look at Tesla. Yeah.
Yeah.
I mean, we don't need to go further than that. It doesn't mean that now every other major car manufacturer in India and globally are launching EVs, but the biggest EV company in the world today is Tesla.
Now is Tesla. The benchmark
is Tesla as the benchmark, yeah.
Exactly.
But the big difference, if you look at Tesla, for example, is that Tesla is more of a software company that in many ways, because it's fundamentally have a battery and the rest, it's not complicated from an engineering perspective.
Yeah.
It doesn't have so many moving parts as an ICE car, but really the software is the difference. Whereas in a traditional car, the software is a good to have, but it's not the core part of the vehicle. So, we'll see. We are, and what we always say, listen, we are investing growth equity. Our investment horizon is 5 to 7 years. We don't have a crystal ball of what's going to happen in 10 years, 20 years, 30 years. Some people are arguing it's going to be hydrogen that will displace EV, and EV is just an intermediary step to a hydrogen-powered world. I'm not smart enough. I don't have a crystal ball to know what's going to happen in 30 years. It might be hydrogen. It might not be. But over the next 10 years, at least, I believe that battery-powered vehicles will grow exponentially. And that's all we need to do. That's the only thing we are focused on.
Riaz, just sort of round out the conversation, right? What are who have been influences in your life or role models that you've sort of modeled yourself after, or potentially are looking to sort of model yourself like after going forward as well?
Listen, I mean, I think that thank you for the question. It's an interesting one.
And I always get very interesting responses as well.
Yeah, so I mean, listen, as a firm, and I mean, this will sound as if I'm marketing here, but it's not. As a firm, we are, as a new entity, we very much are modeling ourselves on CVCI. Okay, CVCI was the most successful growth equity investor in the growth markets, or in emerging markets that it was called then. And they made some mistakes, but they were very successful. They invested with a very low loss ratio across many different countries. They were very thematic in their investing. And Sunil, our senior partner, really was one of the earliest practitioners of structured equity in emerging markets, i.e. making growth equity investments, but really with a big focus on downside protection, with best of class governance rights, exit rights, and so on and so forth. So as a firm, we are really influenced by what CVCI built. Personally and interestingly, for me, we so many examples and so many different spheres, but someone in business, which actually indirectly has a link, and I will come to that in a minute, to Green Frontier and to climate investing, is a gentleman you might not have heard of called Chuck Feeney. Chuck Feeney was the founder of Duty Free Stores, co-founder of Duty Free Stores. That he was he's an American, self-made man, was a veteran of the Korean War, and together with his college roommate, they built what Duty Free Stores, which became the largest chain of duty-free stores in the world at a time where traveling was growing exponentially. But that's not why he is someone that I really often think about. Chuck Feeney gave away most of his fortune, over $8 billion, without anyone knowing about it. And as I said, one of the things I'm very fortunate to come from a successful family business and so on. But, really, as I think about, the second half of my life, I want to have an impact. I will die with the clothes that I'm wearing. Hopefully my kids well educated, and then it's up to them to build their own lives. But, having an impact and leaving a legacy behind is something that drives me and my partners. And, whether people know about it or not is not important for me. And that was something very interesting about Chuck Finney, that he gave away his fortune without most people knowing about it. The largest beneficiary of his donations is his alma mater, Cornell University, which also happens to be where the co-founder of Green Frontier Capital went to do his MBA. Yeah. I'm not even sure whether I've never spoken to Sandeep about that. More importantly, Chuck Finney's family office is a company called General Atlantic, was a company called General Atlantic. Okay, General Atlantic, for those who don't know, is the preeminent growth equity firm. In many ways, is known and credited for pioneering growth equity. Yeah, when the KKRs of the world were doing LBOs and the like, General Atlantic pioneered growth equity. General Atlantic started out with one LP, Atlantic Philanthropies, and Atlantic Philanthropies is Chuck Finney's private charitable foundation. And obviously, Karan, as you know, General Atlantic launched a few years ago Beyond Net Zero. Beyond Net Zero raised $3.5 billion and is the third largest climate-focused growth equity fund, focused on developed markets. So in many ways, it was interesting. It's been this interesting thing. This is someone whose book I read, and really kind of his philosophy of life and business, really appealed to me, but indirectly has a link to not only Green Frontier via Cornell, but also to climate via Beyond Net Zero. Someone else quickly, I think another role model for us, and a firm that we are seeking inspiration for is called Leapfrog. Leapfrog was set up by a guy called Andy Cooper. Andy Cooper's setup really is credited for coming up with the profit with purpose business model philosophy. He set up Leapfrog in 2007, a long time ago, around two themes: financial services and healthcare, and recently, added climate. Leapfrog is focused on Africa and Asia, and really a lot Africa and India, and is now, a multi-billion-dollar AUM in a growth equity investment firm. But really, at its core, it's about making profit, but profit with a purpose. And I think, Leapfrog is a trailblazer in that sector. So, that's a firm that, we have a lot of respect for. Really, I mean, from a business model, process, philosophy, approach, we really are trying to replicate what CVCI did, a decade ago.
Riaz, that's so humbling to hear that the vision that you have is so entwined with what GFC also stands for. Like a large part of that is also to give credit to what Sandeep had visioned. So with that, look, this has been a very interesting conversation. I'm sure our listeners have learned a lot, as much as I have. Thank you so much for your time, for being here.
You're most welcome. Karan, let me close with something, because I forgot to mention this, and this is very important. But really, Sandeep, we should also I personally credit Sandeep for focusing on climate. Okay. 3 years ago also, when he conceived Green Frontier Capital with his co-partners, and shared that idea and that vision with me, I followed the journey and the success that you've had at Green Frontier Capital. And it's been, we've leveraged his insights, his relationships with entrepreneurs and thought leaders, and Green Frontier deserves a lot of credit for getting us to focus on climate, growth equity climate in Africa and India. So, a lot of the credit to what we're doing today, is, goes to Sandeep. So I think I just wanted to recognize that as a conclusion.
Thank you so much. And I think this partnership that we have with you guys is going to be something where we're going to, like, I believe we're going to change the landscape in India, right? And we're really going to be driving the current and the next wave like of innovations coming in this space. Riaz, really look forward to working with you closely. Thank you so much again for your time, and we will definitely talk soon.
Thank you very much, Karen.